Welcome to the Stock Market Daily News podcast for Friday, May 2nd, 2026. I'm here to break down all the biggest moves and ideas shaping yesterday's trading session, from Wall Street's all-time highs to surprising standouts in the software and biotech sectors. The S&P 500 and Nasdaq both notched new records, while the Dow Jones also ended solidly higher. AI fever, tech earnings, and a sharp rally in select cloud stocks were the headlines, but investors also navigated higher oil prices and bond yields that could reshape strategies going forward. Let's dive in. Here's what you need to know. First up, the S&P 500 and Nasdaq locked in new all-time closing highs on Thursday, fueled by another wave of strong tech earnings. S&P 500 futures rose 0.2% after the bell, while the tech-heavy Nasdaq 100 gained another 0.1%. Investor optimism surged as Apple delivered a robust revenue forecast, pushing its shares up in after-hours trading. The message to investors: Big Tech's earnings strength is keeping the rally alive, even as inflation and geopolitical risks persist. In software, three SaaS giants, Atlassian, Twilio, and Five9, delivered blowout earnings, smashing through the so-called SaaS-apocalypse narrative. Atlassian stock soared by as much as 25% pre-market before settling, Twilio jumped up to 20%, and Five9 finished over 20% higher for the session. All three credited artificial intelligence for driving bigger, longer-term client contracts. Atlassian's AI-powered products crossed $1 billion in annual revenue, while Twilio and Five9 reported revenue growth of 20% and 9% year-over-year. The takeaway: AI isn't cannibalizing SaaS spending, it's boosting winners, while laggards will likely struggle. On the other hand, not all enterprise software names shared in the euphoria. ServiceNow beat both revenue and earnings expectations, raising its guidance and reporting robust deal growth, but still saw its shares slump nearly 42% year-to-date. Analysts argue the pessimism is disconnected from operational strength, especially as ServiceNow's net new annual contract value doubled for its AI product. For investors, this highlights a widening gap between software's perceived winners and losers in the AI era. Shifting gears, the bond market flashed some fresh warning signs as India's 10-year government bond yield climbed above 7% for the first time since last fall, closing at 7.01%. The culprit? Soaring oil prices and more hawkish talk from the U.S. Federal Reserve, alongside shrinking banking sector liquidity. Rising yields could put pressure on financials and increase funding costs, so investors in rate-sensitive sectors should stay vigilant. In the small-cap space, biotech is heating up with big upside, but big risk. Jade Biosciences jumped 56% year-to-date after advancing clinical trials for autoimmune therapies, while Artiva Biotherapeutics soared 131% this year, pioneering new natural killer cell therapies. Both remain high-risk, early-stage bets, but analysts expect strong returns if their drug candidates succeed in upcoming trials. For growth seekers, the message is clear: the biotech sector offers opportunity, but not without volatility. To wrap up, let's check the scoreboard. The S&P 500 closed at a record high. The Nasdaq rallied on renewed strength in mega-cap tech. The Dow finished higher, reflecting broader market support. Rising oil prices, climbing bond yields, and the ongoing AI-driven divergence in tech remain front and center. Looking ahead, investors should watch for upcoming mega-cap earnings, a possible ECB rate hike, and the Federal Reserve's next policy signals. If you want these insights every morning, hit subscribe or follow us for your 2-minute market edge every trading day. Thanks for tuning in. See you next time on the Stock Market Daily News podcast.